as some of you may know, at Claim Capital, we've been hosting a series of webinars over the past few months, kind of in and around accessing capital, so in different forms, whether that's through social fundraising, revenue-based financing. But today, we're delighted to be joined by Dan Sparks, Senior Equity Fundraising Manager at Crowdcube. Now, as the title suggests, today is really a chance for you to learn and ask questions about how to achieve a successful crowdfunding campaign. I know they don't need much of an introduction, but obviously Crowdcube are by far the market-leading platform when it comes to helping startups and SMEs achieve equity fundraising through retail investment. So really looking forward to today, and hopefully you all are too. Now, just very briefly before I pass over to Dan, I can see a number of our clients on the call today, which is brilliant to see. But for those of you who are new to Claim Capital, we're one of the fastest growing and most trusted R&D tax credit specialists in the UK. Now that really comes down to two key reasons. Firstly, we've worked incredibly hard to bring on sector-specific R&D tax credit specialists to make sure that your research and development tax claim is maximised year after year. And then secondly, we've kind of changed the R&D advisor landscape in the sense that we provide a fixed fee model, which is only payable upon success. Now, that ensures that as you grow and your research and development expenditure increases year on year, your fees remain the same and you're able to accelerate your growth by investing more and more back into the business year on year. Very quickly, for those of you who aren't aware of what R&D tax credits are, it's the largest tax incentive available to UK businesses. So it enables you to receive up to 33% of the money that you spent on research and development, so whether that's on a product, process, or service. But to put it into perspective for today, one of our clients has actually already successfully crowdfunded through Crowdcube, and they successfully raised over 250,000, of which £100,000 of that was spent on R&D. So what we were then able to do is help that client then claim back up to £33,000 in cash directly from HMRC, which they were then able to then go on and further reinvest into their business. So hopefully it demonstrates why the reason we've partnered with Crowdcube and obviously the benefits that it can bring you as a business. But anyway, look, that's enough from myself. I'd like to introduce you to Dan Sparks, Senior Equity Fundraising Manager for today's session on how to achieve a successful crowdfunding campaign. So over to you, Dan.
Brilliant. Thanks, Matt. Hello, everyone. So today I'm going to be speaking about how to achieve a successful crowdfunding campaign. I suppose by way of intro first, like Matt mentioned, I'm a senior equity fundraising manager at Crowdcube. I've been here for coming up 6 months, so fairly new in the business. But I've worked within the startup world for sort of the past 10 years across sort of various early stage startups. That includes from first employee working in the founder's front room through to a rocket-backed startup with seemingly unlimited cash. So sort of bit of a mix of everything. Primarily I've always focused on building out sales functions, working directly with marketing and generally customer acquisition. Crowdcube, a large part of my role is sort of getting to know businesses and understanding if they have a proposition that we think is going to work with retail investors, if their business is going to suit retail investment. It's generally trying to understand the business's mission and vision and really understand if we think it's something that retail investors are going to get behind. We're working with businesses that are sort of looking to raise anywhere from 150k, so like early stage pre-seed sometimes, through to your Monzos, your chips that will raise in 10 million plus. I'm sure if you've joined, you probably know crowdfunding, you know Crowdcube. We are the market leader, largest private equity platform in Europe, and successfully raised for more than 1,000 businesses and raised over £1 billion. So today I'm going to talk about, overview firstly of just how it works, talking Crowdcube specific, so the process front to back. I'll give you an overview of that, which sort of sets us up to talk about a few things I think are really important to focus on and to be prepared with if you're thinking about crowd round. So from your motivations to how important the importance of cornerstone investment, preparation for a round, momentum, and then post funding and what you can do after the round to keep your crowd engaged. Cool. So so firstly, I'll go through the process. I think it's really helpful to sort of set the scene and understand what a crowd round entails, how long it takes, and what to expect. So on average, it's sort of a 3 to 4 month process, and that's sort of from initial chats with us through to money in the bank. We split that out into sort of 3 key phases. Phase 1 is preparation. Takes around sort of 4 to 6 weeks. At the beginning of your prep, we'll assign you a campaign manager from our team. They're generally all sort of marketing background and will help you pull out the narrative that you're looking to tell, the story you're looking to tell with your crowd round, really understand what retail investors are going to be interested in and how we can shine a light best on your business for retail investors. There's a few key things that are involved in the preparation phases. So firstly is your pitch deck. So much like the deck you would have prepared to go out to angels, VCs and whatnot, we'll look at it and sort of take a retail investor tinted lens on it and perhaps strip it back, pull some information out, and then focus a lot more on sort of the mission, vision, the why you're doing this and what's behind it. Also, I'm sure you would have seen if you've been on our platform, every business that's pitching has a video, usually a couple minutes long. It really shows the personality of the business, who the founders are, who the team is, what you're looking to do. And you can sort of keep continuing to push that mission and vision and what your business is there to do. Another very important part, which can take a while, is your pitch text. So that's the campaign page. It's the page that everyone sees when they're looking at investing in your business. This can take a while for a few reasons. A, the narrative, like I keep mentioning, is super important. So we need to make sure we really hit the nail on the head there. We'll provide feedback and make sure that we're really sort of shining light and in the best way possible on the business. And secondly, we're FCA regulated. So anything that goes on the pitch page needs to be fair, clear, and not misleading, and it needs to be substantiated. If you claim you are the fastest person to run 100 meters in the world, we'll need to substantiate that in some way. So it can take a while. It's a back and forth process with our compliance team, but we're here to advise you on sort of how to make claims without making outrageous claims that we're never going to be able to substantiate. So there's sort of the couple of the key points. I think also in the preparation phase, something that's really important that we've really, in the last few years, I know has become extremely important, is pre-registration and warming up your community. So setting up a landing page on your site that lets everyone know you're about to crowdfund. Crowdfunding is an extremely public way of raising money. Everyone you know and their dog and their dog's friend at the park should know exactly that you're about to do a raise and be interested in it. We'll have a landing page live on your site, which is where people can register their details to find out more about the raise when it goes live, and also give you a gauge on how much they would consider investing. This is a great way for you to understand what your community and what your network is going to bring to the round before the campaign goes live. So we'd get the landing page up as soon as possible, and then start comms, and we can advise you on the comms, obviously warming up the crowd and your crowd and letting them know when your campaign is going to go live and what it entails. So that's sort of phase 1 preparation. That takes around 4 to 6 weeks. It can take, in all honesty, the longer you give yourself, the better it's going to be. The amount of time, every founder I speak to wants to do a round immediately, which is always the case. But just being prepared, giving yourself enough time to really nail the narrative, make sure the deck looks spot on, and really prepare yourself well is definitely going to shine the best light in your business. So 4 to 6 weeks for that. Second phase in the 3 to 4 month process is actually going live. So firstly, we would go private live, which is where your campaign is live on the platform but not yet visible to the Crowdcube community. It goes on sort of a privately shareable link that you can share with your community. So this is where I talked about your building up the pre-registration and building up interest on your side. We would initially give them the chance to offer them the chance to invest first. They're the ones that most engage with your business, and we're giving them sort of first chance to invest. It's a really important point here because it's not necessarily about ticket size and generating lots of generating massive capital investment. It's more about number of investors. So when you land on a pitch page, the first two things you see is the progress bar, which is the amount of money, the amount of capital invested in the business, and the second is the number of investors. So during this during this private live stage, we're really looking to sort of increase that number of investors. So when you go live to our crowd, my doorbell's going. 1 sec, sorry. The joys of working from home. This happened when I was on the phone to Matt last time, and I promised it wouldn't happen this time, but there we go. Christmas presents arriving probably. Where was I? Yeah, so private live. So you've gone private live. Usually private live lasts sort of 48 hours. We've done the comms to let everyone know that you're about to go private live. So really, it's just a short window to really sort of bolster that number of investors and give your community the first option to invest. If you're a B2C business with 1,000 customers, great. It's the chance to convert them customers into investors, give them a chance to get skin in the game and increase their lifetime value with you. Once your private round's done, we then go live to the Crowdcube crowd. Usually this is 30 days long. Initially, it's when our marketing starts and your business goes out to our community. The campaign will go live for 30 days, or if you hit your overfunding target before the 30 days, campaign comes down so you don't dilute more than you'd anticipated to. That is sort of the execution phase. That lasts around a month. And then the final phase in the process is completions. That's predominantly our work. So it's the legals behind completing the round, basically, issuing shares, EIS tax filings, everything to tie it up and processing the payment. We'll set up a nominee during this phase. So on your cap table, you'll have Crowdcube Nominee Limited, which is a single line, rather than having 700 investors, which could be problematic. It's cool. So that's a very, very quick whistle-stop tour of the process. I've done that extremely quickly, but hopefully it gives you, sort of sets the scene. There's a few things that I think are particularly important that I wanted to pull out to think about, which are really set you up for having a good round on Crowdcube and crowdfunding. So I'm going to talk about a few of these pieces. So firstly is the motivation for crowdfunding. This is when you're thinking about raising, why are you actually going to consider a crowd round? Number one reason not to is you're looking for quick cash, and it's an easy route. It's just not. It's a lot. It's a meaningful amount of work to undertake, and like if you're running out of cash and your runway is short, this is not the option to go down. Like, you really need to be thinking of this from it's for brand advocacy. It's opening up the opportunity to your network to invest, whether that's customers or people that are fans of the space, the area, the business. The network benefits you get, allowing peers and sort of your community and obviously the Crowdcube community to invest in your business. And customer acquisition, we work with a lot of businesses that are pre-revenue, pre-product, that build up their order book from doing a crowd round. These are just sort of a couple of key reasons. There's multiple reasons, but if it's quick cash you're after, it's just not the route for you, I'm afraid. Motivation is a big one to consider prior to engaging and starting any of the work. Second thing to talk about is cornerstone investment. Virtually all crowd rounds, bar a few exceptions, are co-funded. So there would be a lead investor. The lead investor can be a group of angels, a group of high net worths, VC, family office. It really is sort of anyone that's putting a chunk of money in at the beginning of the round. It can be family or friends if you're at a very early stage and this is sort of your first time raising funds. I think why it's important, there's a couple of reasons. So firstly, it's to validate your business. This is your business going live to the crowd. Is this the first time they've seen it in a lot of cases when it goes live to the Crowdcube crowd? someone putting a large chunk of money in at the beginning validates your business from the off, and also the valuation. So the crowd come in at the same valuation as the lead investors, and that validates the valuation. We've got discussion forums on each pitch page, and there's always questions around the valuation. It's very hard to value a business especially the really early stage businesses. It's definitely there's an art to it and not a science. So having a lead investor that invests at that valuation really does validate that. And then the final piece is momentum. So when your campaign launches, if you're at 0% and you're looking for £1 million, that's a long way to go. Whereas if you're at 500,000 and you're looking for £1 million, you're 50% there. It sounds basic, but it really is just down to momentum. So yeah, how much lead investment? It's a really hard, it always gets asked, and it's a really hard one, as it's very it's very case by case, depending on your business, what you're doing, how big your community is, who your previous investors are, and so forth. But like as a general rule of thumb, like if you're a B2C business, you've got customers, say you've got 1,000 customers and 700 of them paying customers, you can sort of start to work out, all right, our average basket size is X and we're looking to raise X. What can we expect from this from this community? And then that sort of dictates how much lead investment you might need. Generally 40% is a roundabout sort of figure we're looking for, but it really does depend. And then sort of pre-revenue, pre-product, you're looking for more. You really do need to validate the business before it goes live to the crowd. Yeah, I think there is always edge cases. If you're Monzo and you've got 100,000 customers signed up for I remember I was on, when they were called Mondo, and I was on the waiting list for however long. If you're part of this, if you've got a community like that, then lead investment becomes not important at all, to be honest, because you can rely on your community. And there's definitely a few edge cases. We've got one live at the moment, actually, which is a children's wear brand where the clothes grow with the child, to save you keep buying new clothes every time they get bigger. They're called Petite Pli, I think. And yeah, they've got an extremely engaged community, really strong community, and they went live without cornerstone investment. They're now on £700,000 raised with 500% funded. So yeah, there is edge cases, but generally speaking, cornerstone investment does set you up for the round, and is a really important part of the round. So yeah, I'm really rattling through this and just trying to pick out a few points. So yeah, we'll have time for questions at the end if there's anything that you want me to clarify. But setting targets is something. So there's two targets when you're doing a crowd round. The first target is your minimum target, so that's for your 100% on the pitch page, and that really should be your minimum capital requirement for the round. So in your deck, you've probably laid out what your next 9 to 12 months look like, and you've got an idea of how much cash you're going to need to achieve those goals. That minimum capital requirement should be your 100% target. You should be able to achieve your goals there. And then the second target is your overfunding target, which is effectively the max dilution you're happy with at this valuation. It's always trying to strike a balance whereby you're looking to give yourself enough runway, but you don't want to dilute too much at the early stage of the business. So it's just finding a happy medium. A lot of it you'll see on our investment opportunities. Lots of businesses go into overfunding. Often they'll set themselves up with cornerstone investment in their community to sort of aim to hit that 100% minimum capital requirement in the first week to really start building momentum and move into overfunding. And then, yeah, like Petite Pli have done, they're on 500% overfunded. So you can really build that momentum. It's similar to it's similar to when you're speaking to lead investors, angel investors. If you speak to 50 and then all of a sudden 2 or 3 are interested, out of nowhere everyone else starts to become interested. It's that scarcity and fear of missing out that we're building on, and the momentum of the round. Yeah, so investor pools. So when we're looking at a round or someone that we might work with, there's sort of 3 investor pools that we're looking at. So often I'm looking at cornerstone investments. So your lead investors, who are they? Is it a VC that's got massive weight behind them? Is it angels that have got big weight behind them? It might be early stage, friends and family, all fine. But yeah, it sets momentum, like I mentioned before. So it's something that we're looking for, unless you are in those edge cases with the Monzo-like fans. The second is your community. We work with a lot of businesses that are, but we've got a huge range of B2C and B2B. B2C businesses, often the community comes from their customers, people that have signed up, whether you pre-launch, pre-money, it might be a waiting list of people that are looking to get involved with your services or use your product. And then with the B2B businesses we work with, it's often industry peers and connections that you've made through being in the industry. So we work with some really complex. There's one I invested in a little while ago. Actually, this is the nightmare with working here since I've joined. I'm spending half my wages on investments, but one that I was really excited about is Marine Power Energy. In all honesty, I'm still not 100% sure what they do because they're a super technical renewable energies business. But they had a really big community of people that really believe in their mission and vision. They launched like a brilliant time. We've obviously had COP26, and there's just a big buzz around the area. So you don't need to have a massive customer list to do a big crowd round. You do need to be active and networking and really working out who your networks are outside of the business, who's a friend of the business, who's following the business. So we often, our campaign managers will often do a session with you on sort of really looking at those potential investors in your network and mapping them out and working out, what can we expect to come from there. And then finally is the Crowdcube community. So often I'm looking at business and trying to work out, right, is this something our community is going to be interested in? We've got 1.3 million registered investors on the platform, 65% male, 35% female, which we're really proud of. Female percentages increasing every year, which is great. Ages range from sort of 22 to 25 to 55, and then the highest volume of investors comes from age 30 to 39, whereas most capital comes from age 40 to 49. Often high income households, most sort of like typical industries they're working in is finance, consulting, engineering, those sort of jobs. So we're always thinking about, is this business going to resonate with these our investors and who the majority of our investors are. Cool. So pre-registration, I mentioned this earlier. It is a really important part of your campaign. So Plum Guide raised with us a few months ago. They are sort of a high-end home rental for holiday business. They're sort of, it's really interesting. They're sort of looking to do, you've got their story was you've got the Michelin star, which certifies restaurants. Well, now you've got the Plum Guide that certifies places to stay. Really cool. But they did an amazing pre-registration, which I'm going to quickly show you. So hopefully you can see this, I think. Great. I'm getting a silent yes from Matt. So this is Plum Guide's page that they had live to start collecting in interest from investors prior to the campaign going live. They built a beautiful page. Their website's beautiful anyway, but they really told the story, the backstory. They've got a video. They sort of really set the scene, really hammered home their mission and vision and what they're trying to do. I think like it's just a really great way to sort of build up interest before you go live. They've got some great facts. Like I said, with a lot of our rounds are co-funded, so they're leveraging the lead investors that they've had previously, who they've backed, some reviews, and then some questions. And I think they just did a great job of the pre-registration as a whole. They really got their community on board, and it took up a lot of the round before they even went live to the crowd, which is great. Cool. We're back in. Timing. This is one that gets asked every time I speak to a business. What's the best time to launch? How am I going to get the maximum impact? So I want the most views and I want the most interest. And there's not really a solid answer for this one. I think it really depends on the business, what you do and when's the best time. Like, when are you got most traction to your business, and when is that? Is it going to make sense for investors? When are they going to be interested? So if you're an alcohol brand, don't launch in January, because most people have had too many beers over Christmas and they're looking to do dry January. If you're a non-alcoholic, if you're an alcohol-free brand, then maybe it's the perfect time to launch for you. So it's really thinking about what makes sense for your business. We're not going to say, yeah, right, February the 2nd is the best time to launch because we've got the most viewers there. It just doesn't work like that. It's all about your business. Like, we had a spike of businesses launching from the clean tech world around COP26, because there's such big conversations around COP26, and it just made sense. People were very aware of what was going on, and they want to invest in businesses that are doing good for our future. So yeah, works out to be a great time. Yeah, I know I'll be looking at fitness businesses in January because I've eaten too many Christmas puddings over Christmas. So yeah, it's the timing is all about your business and what makes sense, and also like the momentum of the business. If you're a FMCG business and you're about to get a listing in X retailer that makes a massive difference and is a great story, that's part of your narrative, and it's a great time to launch to the crowd because it makes it super exciting. So yeah, timing is one to think about. So yeah, converting interest into investment. Once you have launched your campaign, you've done the prep work and you've set up the pre-registration, you've gone public live, it's not time to sit there and put your feet up. It really is about hustling and continuing the work and the hard work and really shining a light on your business as for the duration of the campaign. Generally speaking, we see a spike of investment at the beginning as soon as you go live to the crowd, and then there'll be investment trickling in, and then there's a spike at the end of the campaign. And during that middle period is when you're looking to really create a relationship with potential investors and convert that interest into investment. So there's multiple things you can do. Sounds simple, but work your network. Continue on LinkedIn, letting everyone know what you're doing. Speak to your customers, and just generally like I said, it's a public way of raising money, and keep that going. Update your pitch. Update your pitch followers. So there's an opportunity to post updates via your campaign. People choose to follow your business. You can post out updates. Like I said just now, if you get a listing in a new retailer, great. Tell all of your everyone that's interested in the business. If you get a big breakthrough, great. Tell everyone. If you get a interest from a VC that's looking like it's going to convert, great. Tell everyone. Like, it's really about continuing to build the story and keeping that interest going. Engage in discussion. So there's forums on all of the pitch pages where potential investors can ask you questions about the business. There's often the same questions over and over, which we'll prepare you with before, which is, how did you come up with your valuation? What's your exit strategy? How much money am I going to make? Those sort of things. So we'll prepare you with sort of best ways to answer these before. But the ones that I think are really good and make the most impact is when people are asking you about your business. What's your plans over the next 6 months with X expansion? And it's a great opportunity for you to show your passion and show your plans for what you're working on next, and tell further stories. And then finally is open your diary. We've got lots of sort of bigger ticket investors, VCs, family offices that are watching the site, and often will put in calls with you, want to understand a bit more about the team, the structure, the business and whatnot. So just prepare for that, and make sure you've got some time in your diary to speak to these people. And know it's a balancing act, because you're also trying to run a business. So it's like I mentioned at the beginning, it is a meaningful amount of work to take on, with potential of like huge benefits, but you do need to be prepared for the work. Post-funding. I think this is the last one as well. So post-funding is incredibly important. So you've built up this, say, 700,000 investors across your campaign, which is great. They've all got skin in the game. They love what you're doing. They're bought into the mission and the vision. Next is to keep them engaged. So a requirement from us is that you would update them quarterly. That's a typical investor update that you might do to your other investors. It can be a light version. We don't have any information rights, so it can be much more focused on the exciting things you're doing. it's also a chance to ask your team, your network, your investors for help. If you're looking to hire a CMO, ask them. Often, like I mentioned, our investors are often in working for sort of the sort of businesses that would be able to lend a hand. We've set up recently a value add investor program, which is whereby at the time of investment, investors can leave a note and let you know how they can add value to the business. At the end of the campaign, we'll send you across a spreadsheet which contains the details of everyone that have claimed their value add and how they can claim how they've claimed their value add. At the moment, it runs around 17% of investors claim their value add, and it's a complete mix from people that are looking to test your products and give you feedback through to we had one of the first investors into free trade via Crowdcube. Loved the business and then got in contact and then went on to become their CMO. So it really does completely vary on who your investors are and what value they can add. But it's a great way to have this wealth of people that are interested in helping the business. Really can benefit you. Also goes without saying, sort of future rounds, having a pool of investors that love what you're doing and then you've kept them up to date with your quarterly updates and kept engaging them. They're great source of finance for future rounds. We've had some like real big ones that have come back to do multiple rounds. I think the most recent being Chip. Chip have done 9 raises with us now, and they've raised 37 million across 44,000 investors, which is incredible. Their fans or their investors absolutely love what they're doing, which is really cool. We've got some of the big B2B businesses like Cornish Lithium that we work with. They've done 5 raises with us, one fairly recently. Raised 12.5 million across 6,000 investors. Monzo have done multiple raises. Yeah, so what I'm getting at is if you really sort of keep your investors engaged, and when you come back to do next rounds and they're really excited by what you've been doing, it's a great way to start those conversations. And then finally is just have fun with it. We've got there's loads of great examples where businesses have sort of really had fun with it. There was a business that we worked with a couple of years ago that was a well-known sweets brand that wanted to be stocked in Harrods, couldn't get a meeting with the buyer, and asked all of their investors to email the buyer requesting that product to be stocked in Harrods, and it worked. They got a meeting because it kicked up such a storm, and they went on to be stocked in Harrods, which is really cool. I'm not suggesting that everyone goes and does that because it might not work depending on what sector you're in, but it did work in this instance. And I think like one of the most popular or sort of really have done it so publicly is Brewdog. They really harness their community and they use their shareholders for all sorts, including like crowdsourcing locations of new bars and really got them involved. I heard that they do some sort of investor parties that are pretty wild as well, which is cool. But yeah, I mean, it's just having fun with it. You've got this army of people that love what you're doing, so it's your chance to engage with them and keep the ball rolling. That was it. Hopefully short and sweet and hopefully very informative. I tried to cram a lot in there. So my email's on here if you want to get in touch. I'm always up for a chat, or you can just give me a shout on LinkedIn. But then I know we've got some time for some questions. You can see the chat box has dinged a few times, so I'm happy to answer questions.
No, that was absolutely spot on. Thanks very much, Dan. All right, perfect. So we've actually got first question come through. I've got plenty of questions myself as well, so we can get that underway. So Sophie's asked, what happens if you haven't fully funded after the 30 days? What's the process there?
Yeah, so we take a view. I mean, like, in all honesty, I really hope that doesn't happen. We work on a success fee, whereby we don't get paid unless you get funded. And if we wasn't confident that you were due to fund, we would tell you and we wouldn't go ahead with the raise. This year we're on, I think it's either 93 or 94% success rate. So yeah, I hope that doesn't happen. If it does, we'll take a view of how to deal with it before the end of the time.
Okay, fantastic. So Lee's asked the question: is this only for UK?
No. So there was no one asked me any questions on the regulation changes because we've had multiple meetings where our European team have updated us, and I'm very confused by the whole where the regulations stand at the moment. But there's been a regulation change whereby some crowdfunding rules got harmonised across Europe, which makes it much easier for us to expand across Europe. So yeah, we're now a European platform. We've got office in Barcelona, Paris, and continuing to grow. So yeah, we can accept. So if you're a UK business, we can accept investment from across the world. Depending on what investment we can accept, how much, etc., is determined by the city or the country's ruling. That should become a lot easier as these regulations being harmonised comes into play sort of over the next year. No one asked me any more questions on the exact regulations because it's super confusing. But yeah, we're getting there, and I know it's a huge focus for Crowdcube over the next 12 months, and I'm really excited for it because it means that businesses in the UK that are looking to sort of expand across seas will be able to also take investment across seas. So yeah, it's really exciting.
No, I think just on that point, I mean, one of the questions I was going to ask, and we will go back to the audience in a second, was just kind of around SEIS and EIS. That's kind of a question that we get asked a lot about from our clients. You know, can you help with this? Naturally, given you're in the investment space, is that something that you can help with in terms of making those SEIS or EIS applications?
Yes and no. So firstly, it's a brilliant tax relief for investors. If you are, if you hit the criteria, 100% apply for it. It's really attractive. A lot of the businesses we work with are SEIS, EIS applicable. The application process itself is sort of like a checklist of things that you need to be submitting to the HMRC, which are like business plans, financial forecasts, budgets, etc., etc. And part of that is a list of investors that are looking to invest in this round. And we can act as that investor. If you're already in the process with us, we've got a letter of intent that we've crafted with the HMRC that acts as part of that application. So yeah, if you're already in the process with us, we're happy to supply that letter. In terms of actually doing the application for you, we don't. In all honesty, it's something you can do yourself. It's a lot of just finding your digging through the vaults and finding files that you completely forgot you saved somewhere on your computer. You can also look to someone like Seed Legals that can help you pull that together.
Okay, no, fantastic. So we had a question from Giles. Some companies offer paying services to prepare companies for crowdfunding campaigns. How does that compare to what Crowdcube is offering? So I guess that's probably in terms of that first part, that pre-preparation.
Yeah, so they're called campaign support partners. There's a few of them, and I think so. We're here to offer guidance and advice, and we've obviously done over 1,000 raises, so we can point you in the direction of what the best class sort of looks like. If you're limited on team size or resource, or you're not sure you're going to be able to execute it yourself, then a campaign support partner can be great. The service they offer completely range from sort of like initial help with to outreach lead investors through to directing your video. They really offer like a multitude of things. I feel like if you've got the team to do it, then you might not necessarily need a support partner, but if you need the extra pair of hands, then they can be great. Or even if you do have the team, but you want them to continue focusing on the business, and you can look towards a support partner. We work in tandem with a lot of support partners, and primarily it's with teams that are looking to offload the work. So yeah, they all offer a different range of. Some will literally act as an extension of your team, and some will work on the various parts that you need help with. So it really depends on what you're looking for.
Okay, perfect. Hopefully that answers your question, Giles. Tasha, are you able to help make intros to angels and VCs at all? I'm sure that's a question you get asked quite a lot.
Yeah, we get asked this one all the time, and we have tried to set up. sort of functions to do so, but it never really sort of took off because I think a couple of reasons. I think that the main reason is angels VCs or high net worths or whoever it might be, they want to be contacted by the founder because they've been selected to invest in that business. And us doing an introduction, it might work, but ultimately it really comes best if it's from you and you've selected them because you think that they can add value to your business, especially if you're an early stage business. If you're taking external money for the first time, say, it's really important that you take the right money and that they understand your mission, your vision, and your goals align. So I think coming from you is a much surer way of closing that deal and getting a response. So yeah, like we don't, as a rule of thumb, we don't. If we can, we will, but like it's really, we would always say like, do it yourself. Campaign support partners can help with that. I know some of them offer like research, whereby they would effectively research who could be interested in investment, but then it would still come back to you to actually do that outreach and try and close the investment for the simple reason that it comes best from you and that the investor wants to get to know the founder and they want to see their approach, and it makes for the best start to the relationship, really.
No, 100%. Thank you. Hopefully it answers your question, Tasha. So Nick, say we try to raise 1 million, 500,000 from our cornerstone investor. May I have an example of your charges, please?
Yeah, so we charge, like I mentioned earlier, we charge on success. So there's no upfront engagement fee at all, and there's no marketing fees. It's simply a commission at the end of the round. Our standard commission is 7%, and then, but bearing in mind we work with businesses that are looking to raise sort of from 150k through to 10 million. So yeah, our fee is 7%. It's cheaper if you come via Claim Capital because we're offering a discount if Matt makes the intro or you come via this webinar. So, but yeah, that's a starting point, a ballpark. But depending on how much you're looking to raise, we take the conversation from there.
Okay, perfect. So one from Paul. My business is B2B with existing clients. Should I get the business valued prior to starting a conversation about funding, or is this part of the process once we're in the process with you?
Yeah, so we don't get involved in advice on valuations. We can provide you with examples of businesses that might be similar and can give you guidance, but we won't win. It's not, we're not regulated to give financial advice in that sense. That's why I was talking earlier about the cornerstone investment being an important part. If you come up with a valuation, or there's businesses out there that can help you get a valuation for your business that you could look to if you're not sure where to begin. And then once you start outreaching lead investors, angel investors, or VCs, you'll very quickly get a sense of, okay, we've gone in way too high or way too low, or if everyone's biting your arm off, then you can maybe think about reassessing. Equally, if everyone says it's out of reach, then you can rethink of it again. So yeah, we can provide examples, but we're not going to be giving you advice on valuation. We would if we thought, because if you're early stage and your angel or your lead investors are friends and family, quite often we see that they give favorable valuations because they are friends and family. And if we think that the crowd are going to not take to that because you've gone in at too high valuation, we'll let you know. But yeah, we're not necessarily helping with the end number you get to.
Okay, fantastic. All right, well, that was the last question that we had, Dan. I don't know if there are any more that are going to come through. But yeah, if not, I know one of our team, Amelia's just put our contact details in. Oh, we've got one through from Toyin. Do you do crowdfunding through product pre-sales?
How do you mean? Do you mean
I'm not.
Are you trying to build a sort of? Yeah. So if you're pre-revenue, like I mentioned earlier, it can be a great way to sort of start drumming up interest to to gain your first customers. Like, I suppose an example of that, a big one was Nothing, the tech brand. We launched a round with them, I can't remember if it was earlier this year or last year now. But they were pre-revenue, pre-product, and 50% of their investors went on to order their first product within 24 hours of its launch. So you can start to build an order book. I think another one from memory as well, which was a good example of that, is Ikigai, who are like a wealth management fintech, and they launched pre-product. And when they launched their service, 75% of their investors became paid customers off the bat. So it's a great way to, it's definitely a great way to build an order book. Hopefully that answers your question, I think.
I guess it must be quite a tricky one, because if you just have kind of an off-the-shelf product, which may be like a one-time purchase, you could provide a significant discount if you're an investor, let's just say. But I guess it would work really well if you're kind of a subscription-based model. You can give them a discount for the first, let's say, 6 months. And then naturally, if they're tied into using it all the time, they're then happy to pay full price after that. And I guess it really works really well in that sense.
And also, they've got skin in the game. They've invested in the business. The likelihood is, like these retail investors, the ones that are put, so average ticket size of investor is £1,000. And they're the ones that are in the pub telling all their friends about their investment they made because they're proud of it. Mm-hmm. And then they are your network effects. Like they're the ones that really spread the word. So I think, there's a lot to be said in terms of the marketing power, in terms of gaining more customers from them as well. So I think that definitely it's a great way to kick things off.
All right, fantastic. I think that's all of the questions we've got to date. Look, obviously, firstly, Dan, thanks very much for your time today. Really appreciate it. That was really, really insightful, and I think you kind of hit every single aspect perfectly. So, thanks for everyone else who attended as well. Obviously, if you'd like to reach out to Daniel or myself, I'm more than happy to make an introduction. As we mentioned, we do have a partnership in place, so there is a 10% discount on the success fee with Crowdcube if you come through Claim Capital. So more than happy to help. But no, thanks very much for attending, everyone, today, and happy to help where we can, I guess.
Awesome. Have a good Christmas, everyone.
Have a good one.